Hello traders out there in Traderland. My name is Des here at Rock Trade on Tuesday, April 24th, 2012. And we have a mixed market here closing out the day. However, the Dow up nearly 75 points, up 0.6%, the S&P up 0.4%, NASDAQ down 0.3%. Russell's up 0.8%. You have the banks up, leading the market all day long, up 1.5%. VIX down 4%. So fear really dissipating here. Gold up a fraction, silver down a fraction, and U.S. crude oil up 0.36%. Gas prices haven't been doing too bad out there lately. And you have the U.S. dollar down 0.27%. And here we are taking a look at today's bounce. And we have what's called an inside trading day. Lower high, higher low, and we're just on the inside of this. So you kind of have this bullish Harami pattern, and it's even kind of a bullish thrusting type pattern. The problem is we did go higher, but we closed lower. So the bulls could not keep it up here, and we're still below all major moving averages. But you'll see that I drew two other lines, a dark line coming down from this swing high to this swing high, and also this swing low coming up to this swing low. So we have a pinching pattern. Stocks hate to be pinched, and anytime this happens, you build up strength and power. Unfortunately for the bulls, we are developing into the apex below the major moving averages, opposed to that apex happening above the major moving averages. And at this point, I can probably get rid of these lines, and this is what we're looking at in the markets. Now, tomorrow, gang, we do have some news coming out, and one of those news pieces that will be coming out is the Fed. They're coming out and speaking, and it's likely they'll tweak their forecast a bit and maybe even refresh their commitment to their low rates through perhaps 2014, and even possibly hint at when their accommodations might end. So that should be interesting, to say the least. We also have durable orders being released, and we have Apple coming out with earnings, and that should be happening any time now, and that will be huge news going into tonight and going into tomorrow to see what those boys are going to be doing. And let's take a look here at the weekly chart. On a weekly chart, you have this big run up, and we're finding support. We're almost starting to build a little base here. So if we're going to rally, it needs to happen pretty soon. If not, we're going to build a low base, and that will give us something to break down on a weekly chart. On the monthly chart, we have a tweezer top, and it looks like if we start breaking down, we could really be going into May and June and July into some turbulent times, because each one of these candlesticks, these bars, represent 1 month. And so far, for the month that we're in here in April, it's been more negative than positive, and it's been a while since we've had a nice little pullback. So we had back here at 2010, nice little pullback. Here 2011, a major pullback. We're due for another one here, so it's something that we're watching fairly closely. This is Apple that I said could be a buy in yesterday's video. We have a really nice falling wedge. Take a look here at the MACD. We're stepping down, but if we do get a crossover taking place, that'd be nice and bullish. And furthermore, if we do pop tomorrow going above the 50-day moving average, that's going to give us what's called a morning star reversal pattern, and we should get a leg heading northbound. So it's something we're watching for. And GLD, some people wonder why I'm saying GLD is a buy. Yesterday I said it was a buy. We did pop today, so gold did go up a bit, but we're not getting that big run quite yet. But if you go to a weekly chart, you have this pop and then a pullback, and we're ready to run again. But more importantly, on the monthly chart, support, 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 and support. We're right there right now. And anyway, that's where we're at on things. So in my institutional account, I have several, 6 positions. Oh, I think even 7 because I'm in gold now. And but I still have some cash and be ready to put my hedge back on if the markets start to turn over. So there you have it. Make sure that you sign up for the 201 courses. That is your next step. You can only get so far with the free information. Get the good stuff, get signed up. Take care and safe trading to you.